Have you ever wondered what the escrow account is that's on your mortgage statement that seems to go up and down every year and makes your payment change? Well, if you want to know about that, stick around. We're going to talk about the details coming up next. Hey friends, Ryan Reynolds here with Keller Williams Consultants Realty, your KW certified real estate planner. Well, today we're talking about escrow accounts, and we're going to just start off by asking, what is an escrow account? Well, you can think of an escrow account as a savings account that your lender or your bank, where you have your mortgage at, has an account just for you so that when you pay your mortgage every month, and then that mortgage is actually typically made up of 4 pieces. You're going to be paying your mortgage interest, you're going to be paying the mortgage itself, the loan down, you're going to pay for taxes every month, and you're going to pay for insurance. So the PITI, they refer to that as. So when you make that PITI payment every month, the bank keeps the mortgage interest, of course, because that's their profit. They also reduce the amount of your mortgage by a little bit, usually a tiny bit, and then they take the taxes and insurance portion and they put it into this savings account that they've started on your behalf. Now, that money in the savings account is used every year to pay bills that come due. The property taxes in our area come out twice a year. They come out in January and in late June or July, sometime like that, and they're due in July. And your homeowner's insurance is probably only due about once a year. And those things are what the escrow account is used to pay. So basically what happens is that every year when you have your property taxes come due those 2 times and your insurance that 1 time, those entities will send the bills directly to your bank. They'll go to the escrow department where they'll look at the bill and then they'll issue a check to pay those things. So now why do they do this? Well, banks kind of look at your house as their asset because they're actually making money off of that every month, and they want to really protect that. The 2 things that bank liens or mortgages have that they can really be hurt by is if the house burns down and there's no protection to pay off the mortgage, therefore your homeowner's insurance is important to them. And the second thing is if the government puts a lien on your property, that lien would be superior to any kind of mortgage lien, no matter the timing. So the government, of course, being the government, gets to do what they want, so that's why there is a superior, they get paid first. So that's what an escrow account is. So how do they figure out how much escrow you should be charged every year? Well, initially when you get a loan, you're going to have a calculation that's done, and they're going to take your property taxes. Let's say that those taxes are $4,800 a year, and they're going to also take your homeowner's insurance quote, and let's say that's $1,200 a year. They're going to add those 2 things together, and they're going to come up with $6,000 a year. They're going to divide it by 12 months, and then they might add a little bit of a buffer, and they're going to charge you that amount every month to be collected into the escrow account. Now, once a year, your bank will go back and they'll look at the bills that they've gotten, and also they'll do a projection of what they think the new bills will be based on how things are going up. So when your payment goes up every year, it's going up because they think either the homeowner's insurance or your property taxes are going to be more than they were last year, and so therefore they want to collect some extra money. Now, the real tricky part comes in when they come in short. You get that letter in the mail and it's got this big long analysis and it says, hey, you can shoot us a check for $200 or we can increase your payment every year. It's your choice. Now, if you don't send in that payment of the extra $200, they're going to just go ahead and increase. So in short, an escrow account is really just your lender's way of helping you to budget for those big expenses that come around a couple of times a year, and they say they're doing it on your behalf, but really they're doing it to protect their interest. So just kind of understand that. And you don't really have a choice most times, so I guess you just have to get over it. That's how escrow accounts work. If you have questions about your specific situation, feel free to reach out. Again, my name is Ryan Reynolds with Keller Williams Consultants Realty and the Ryan Reynolds team, as always, guiding you to the home that fits your life.